Going to walk through what we're looking at for the day, what we're seeing, what the possibilities are for potential trading opportunities. Today's Tuesday, 12th of October. Might have already said that, I don't know. Anyway, let's go ahead and jump into it. Yesterday was a bank holiday, so even though we had signals on our trading application, you wouldn't have wanted to take those because it was a trading holiday. There's electronic trading happening through the day, but our mass of traders aren't there. The same volume isn't there, and you don't want to trade when you've got times of significantly lower volume. So anyway, what is going on today? Let's pop over here. We'll go into this. As far as the news goes, no news that we need to worry about for the day today. Big things over here would just simply be to look at our trends and see where we are. The S&P has a short trend on it. The 4-hour bias is short, the 30-minute bias is short. So what that means to us is we'd like to see the market float up, making higher lows and higher highs, higher lows, higher highs, and then break back in the direction of that market bias and take a short position. This is what we'd like to see for the day. Crude over here is still in a long bias. 4-hour bias is long, 30-minute bias is long. So that means we'd like to see the market pull back a little bit more like it did over here earlier this morning. We'd like to see it pull back, making lower highs and lower lows, lower highs, lower lows, and then give us this push like it's doing now, unfortunately. Give us this big push to allow us to go back in the direction of that current market bias, which is long on crude here. And I know it gets tough especially when you get up in these high areas and you're like, man, it's really high. You know, how much higher can it go? Be careful of that thinking because how much higher can it go? People have been asking that since it was way back here, and it can continue to go higher. It'll go higher as long as there's people there to keep buying it and keep pushing it higher. So be careful with that type of thinking. Follow what the market is telling you to do. Over here in gold, we've got a mixed bias. The 4-hour bias is short, but the 30-minute bias is long. We've actually kind of gotten into a bit of a channel here on gold, really. Bottoms down here around 1750 and tops up here around 1765. So we're in a bit of a channel on gold. But the bias is mixed, so we really need to wait and see what happens. If it breaks above that 1765, closes above it, that might be the opportunity for that to start pushing longer again. Or if it breaks down or breaks below 1750, that would be the opportunity for it to maybe start continuing short. But right now, the bias is mixed. It's just a crapshoot, so no point in chasing it or doing anything that you think is a leading indication of the market. Let the market decide what it's going to do and then just follow the market. That's what we want to do here. Trend following has proven over time to be the best and most consistent way to trade the markets over that long term. You're going to have times when the trends are mixed up and you get chopped out of the marketplace, but then the rest of your trading time makes up for that. And historically, that's where we want to be, right? Small, consistent gains. Consistency. So anyway, I'm gonna leave it here, leave it with you. So we've got potential, we're looking for longs, we're looking for shorts on the S&P, longs on crude. And but if the market doesn't shape up to give us those, then we don't trade it, right? That's the biggest thing. If the trade's not there, sit on your hands, don't force the trade. Let the trade come to you. All right, so we'll leave it here for now. Come back tomorrow, see what's happening.